Arnab Naskar, how are you?
I'm good. How are you doing, George?
I'm doing very well. I'm doing very well. Thanks for making the time.
Thank you for the invite. And yes, it's a pleasure for myself to be here. Thanks.
You're welcome. You're welcome. So, can you tell me a little bit about yourself and STOKR?
So my name is Arnab. I am currently based in Hamburg and traveling between Hamburg and Luxembourg quite often these days. Background, I am a lawyer in this crypto space from 2013. Came in academic research. I was first doing my master thesis on not crypto, I would say, but algorithm and those kind of things and competition law, how the cartels are being created in the new age of digital era. And then I got introduced to cryptocurrencies research. I was introduced into crypto using Bitcoin for trading activities back in 2013, but I never took it as a part of my profession until 2015. And 2016, I started getting much more involved advising various ventures, how to legally set up their ventures in the crypto space, what things they need to understand when they're entering into a contract in the crypto space. And slowly, I entered into the field. Okay, there are a whole new era of financial ecosystem that opened up. And coming from the legal background, I realized this will be an area I will be really interested in to see myself in next coming years. And things started. I got in touch with some people in Germany who got some funding to make small and medium enterprises understand about blockchain. And the idea of SECOS and STOKR started actually. And the initial company, the parent company SECOS, which subsequently developed STOKR, and now STOKR is an independent company of its own. So what STOKR is focusing is on securities market, securities token market to be specific, but we are not targeting a huge area of securities market. We are targeting one small element, that is tokenizing the profit sharing right of a company and how to issue it as per the European legal structure, European securities law. And that's what STOKR is aiming. STOKR is planning to create an interface where investors can connect with the ventures, and we are providing the technological landscape and the platform where the tokenization aspect can happen. In this regard, we are providing organizational and legal support to the ventures, and for the investor side, we are providing an interface which is very easy to understand and how they can manage the user journey in a crypto space much more frictionless, in a very frictionless manner. That's what we are providing. So we can call it a legal tech fintech startup as STOKR. We are planning to launch in April this year, right now.
Okay. You're planning to launch in the spring this year, is that right?
In the spring this year, yes. And this will be full live, so we will not do an IC or something because we are not raising any money. We have already raised funding. So what we are doing, we're just a platform launch at this point.
Okay.
Yes.
So basically your platform will allow, I guess, non-accredited investors to invest in the space, or how does it work?
Our target is to get both retail investors and accredited investors. So both we are targeting. We are trying to create a new era of capital market in simple sense, where you can access being a normal investor also in the early stage startups, and you don't need to restrict yourself to be an accredited or to be a qualified in European term. So the platform will be for both qualified and retail investors.
Okay. So the companies that will be listed, I guess, on your platform, are they going to where are they going to be listed on like a legacy exchange in Europe, or are they going to be listed solely on STOKR?
So STOKR is a primary issuance, like the secondary market is not on the STOKR. We are looking and talking with various players who are working to get this license requirement in the European market. As of now, we do not see there is any project that has that license, to be honest, to list this kind of securities token. But we are hopeful that in coming 12 months, we will get some venture in the European market who will be qualified to actually list this kind of tokens or qualified financial instruments. Yes.
Okay, cool. One of the things that I'm a little bit weary of when it comes to, because your platform is based on Ethereum, is that right?
Yes. We are using the permissionless structure. We are not creating some kind of fork or creating some kind of sidechain or some new architecture. We are using the permissionless structure And definitely the tokens that are being issued have a different framework than pure vanilla ERC20 standard. But this, we are trying to use the pure Ethereum structure right now, the permissionless one.
Okay. So, so I'm not an expert on Ethereum, but I do remember a few years ago there was a little bit of a debacle with Ethereum and the DAO. So they had actually tried to create like essentially a decentralized autonomous stock market that would allow people to invest through the Ethereum network into, you know, various types of startups. And and the DAO very quickly got hacked. And as a result of this, there was a big controversy. A lot of people lost their money. And then the core Ethereum team decided to reverse the hack, the transactions, and give people their money back. And then there was a community in Ethereum that forked away from Ethereum and created Ethereum Classic. So are you, how do you guys plan to kind of mitigate some of the security challenges, or do you feel that they've already those concerns have already been addressed, or you know, what is your general kind of position when it comes to the security of Ethereum based investments?
So to be honest, like the Ethereum is still maturing itself. A lot of vulnerabilities which we are not aware of is coming, is getting discovered over the period of time. But I would really say the Christoph Young's team in the DAO, it was a quite ambitious move. Definitely at that point of time, we should really, like, I really am proud to say this kind of endeavor happened at one point of time, to not only just to show that where it can go wrong, but also to give a challenge that this can be done. And I think the MakerDAO and other kind of projects are really trying to take this thing to the next step. Now, what we are trying to do on STOKR is not only a blockchain-based company, but any venture from any background can use this kind of tokenization element, issue their profit-sharing right in a form of token, and raise investment.
Okay.
So we are using tokenization as an investment option. The same thing that did an ICO, you know, entire ICO space, is somewhere just meant to be a funding mechanism at one point, right? It was nothing more than a mere funding mechanism. I don't see this as something wrong, you know. If the utilization of crypto starts with the financial market, and the financial market, we see a lot of digitalization already is in place as compared to supply chain and others. If it starts from there, there is no problem. But on the other hand, in ICO space, a lot of people said there is a requirement of utility token. Now, let's say I go to buy a burger. Why I require a utility token in a burger shop? We can force it to make it a utility payment token or other, but it will be superimposed. You can actually take Bitcoin or Ether also for selling the burger. You do not require a new cryptocurrency for that. Now, on the other hand, what we contemplated that if a company can issue their profit sharing right and not their ownership right, not their voting right, because in DAO there was a voting right also. But here we took the voting right down. There is no voting right of the investor in day-to-day business, but a voting right only if the terms and condition of the STU is being changed. Let's say the company initially said, I will share 20% of the profit. Suddenly it went down to 10%. Then you have a right to vote and right to claim that it was wrong or something has to be changed. So here, in this regard, I think a lot of things are managed in a compliance manner, because to be honest, DAO is a good concept, but also the capital market law still does not recognize this kind of legal structure. And also, if you see the SEC's ruling after that, we said, okay, though DAO is a good concept, but there was somebody who has an incentive to run the DAO, and that person has a liability if something goes wrong, right? So there is also some kind of liability regime that came in to highlight, okay, who was the person that has an incentive to even advertise DAO? Who was the person that also promoted the word and went to the conferences? That person is liable. So we have not reached this maturity stage that we can say everything is decentralized. A lot of things definitely we can put on, and we have to rely on the current notary system or auditing system. But a lot of things we can put on-chain for transparency purposes. And what we're using the blockchain is mostly for the transparency aspect. Like if I want to raise this much of tokens and this much of fund I want to raise, at future date, I should not be able to say, hey, the tokens does not exist, or the rights have been changed. Or let's say I bought everything and suddenly from the market and I try to dump the price. do an exit. So this kind of things you can actually see it on the crypto-based transactions, which is clearly visible, right? And to answer your question in short, in this regard, a lot of challenges are coming. A lot of challenges we see that it will mature up, but we have learned also quite a lot from DAO. And these things we are trying to put as a best practices, which we should see, because managing the key and managing the tokens should be ultimately also being educated. So on the platform, we are not only providing an option to do this kind of fundraising, but also we are stressing quite a lot of the education aspect. So we try to educate the investors how to manage the keys, what is the industry's output, what are the risks and rewards. On the other side, another key aspect on the platform is the communication. So on the platform, you can also talk to the investors and the ventures, which will be different than what you talk in Telegram, because in Telegram, let's say there is a genuine company, but you want to spam them and you want to spam them with 100 bots, the communication channel gets completely lost. Yes. So
Yeah.
on our platform, you can only communicate once you are signed in. So this actually restricts and also gives the venture really time to talk to the people who are really interested in the venture, and is also asking some relevant question. And you can also see if the venture is not responding to a relevant question, this is also visible. So you cannot hide that. So this element, the transparency and visibility part, we are trying to put in, because what we realize, a lot of things can be mitigated if you bring transparency and communication on the platform embedded and not keep it a segregated aspect.
Okay. How do you deal with the transparency issues of having kind of fiat-based profits, right? So, for example, if you had a crypto startup that was making all of its money in cryptocurrencies, you could see how much a company was profiting. You know, what its gross revenue was, what its net revenue was, you know, profits and loss statements. You could kind of see that transparently. But what do you do with a company that has some of its profits in the legacy financial system that are off chain? How do you integrate that visibility to give shareholders a full view of the complete financial statement of a company?
So here, what we are planning to work on, I totally agree that you cannot do it on chain. This is very hard. So what we are doing, we are putting, and this will be part of the obligation also the venture has to take, is they have to put an auditing firm on top. An auditing firm will create an annual report based on the cash inflow, cash outflow. But let's say, for example, a venture did a business model projection where they says in 4 years we will start distributing the profit. But let's say in the 4th year, they made good amount of profit, but they want to reinvest into the company so that they can actually do quite a lot of growth. So let's say they want to expand. And I think for investors also it's very important if the company value increases. So they can also communicate this thing to the investors in a very transparent manner. This is the reason I mentioned the communication part will be very much open, that they can communicate. And if the investor does not want, they want the profit, they can also mention via consensus. So this is a governance part. But at this point of time, we are trying to rely on the auditing firms and other intermediaries who, because they have an obligation, they have a legal obligation not to give a wrong statement. And once they publish those reports, this is also very beneficial for the investors to rely on when the business projection is going. Was it completely wrong, or was it something that needs to be changed, or everything is beyond the expectation, what the investors also had. So this we are trying to create right now off-chain basis, to be honest.
Okay, very cool. Another question that I have, I guess, is how do you manage exit preferences? So for example, if a company gets acquired, you know, I guess the primary issuer of the security tokens would have some control over the sequence of the shareholders exiting, right? Like, so let's say that I'm the owner of the company. If I'm kind of a bad actor, I can say, okay, well, I'm going to cash out my position first, and then I'll let everyone else kind of cash out their position. So how does that work over STOKR?
So on STOKR, the instruments that are being issued, these are financial instruments, like these are transferable securities. So you have to follow the first thing as a venture, transparency directive, and also you have to follow the other best practices and disclosure requirements and other stuffs, and market abuse regulation also. Now here, what is the difference than the current ICO market with these things? in ICO, let's say a venture is also selling their tokens in the market, and suddenly somebody says the company which we know, a card-based company, I don't want to name, recently their founder left the company a few weeks back, and before leaving, that founder actually sold all the tokens in the exchange, right?
Mm-hmm.
In a financial instruments like a transferable securities, the founder has an obligation to disclose, because that founder has an insider knowledge that this kind of activity, that if he leaves the company or something, the price will go down or price will get affected. So they have a knowledge, they have an internal knowledge. So this needs to be disclosed, who have the internal knowledge, what kind of internal knowledge, and whether they are also trading at that point of time. So this disclosure obligations by law will be there on the ventures. Right. On the other side, as you also mentioned, what are the obligations as an investor you have, or what are the rights as an investor you have? Now, what I mentioned on STOKR, the instrument that we are issuing and or the ventures are issuing is a profit sharing right. You do not have a right to the ownership, but you have a right to profit. Now, this right to profit has also subordinate right, which we call it an exit right. Let's say the company is doing a Series D round and SoftBank or somebody comes in and they want to buy the company. Do you really think that 20% of profit sharing right of early Facebook will be able to stay when the Facebook goes to IPO? 20% of profit sharing right of IPO will be huge, right?
Right.
The Facebook kind of company. So there actually they can buy back at a fair market price, and this needs to be analyzed, what is the fair market price and other stuffs. And also they have an obligation not to manipulate the market, to reduce the fair market price and then buy. So there are a lot of obligations by law will be enforced, because these are financial instruments. So here I see that a lot of investor protection automatically comes in as per the existing. But also we need to be very clear that these kind of financial obligations and disclosure obligations should not, stop this process of securitization of financial assets, right? We are trying to go away from the legacy instrument to this kind of digital assets, because let's say companies like Apple, Uber, Facebook, they cannot be valued properly with the current stock market structure, because stock market works from 9 to 5, 7 days a week, and they cannot value these days the digital kind of companies who is so global and so cross-border that you cannot restrict on certain jurisdictions stock market. It's quite volatile, and here I think an integrated stock market which can be actually promoted by kind of crypto kind of assets, here I think really that is coming, and definitely the existing laws will be applicable, but on the other side we have to also adopt the flexibilities that the crypto assets are giving in the space.
Okay. Now, the point you brought up earlier about not necessarily having an ownership right in the companies that you invest in is interesting, because for many investors, they don't necessarily want to get a dividend, because then they would actually have to pay tax on those dividends, right? Like a profit sharing agreement implies that you're getting a dividend on your stock position. And then you'd have to declare that dividend as a form of revenue to your relevant tax authority. So many investors would prefer that the profits actually be reinvested in the company, and that their ownership position grows in value. So how would you kind of address those tax liability concerns that some investors might have when it comes to just having a pure profit sharing agreement with a particular company?
So we are currently targeting the investors from the 28 member states. After Brexit, I'm not clear also how this will work. So I'm not talking about the UK. So let's say 27 member states. In this regard, we will also try to give them education modules, how they can manage their assets and those kind of things. But to be very fair, yes, I also agree that a venture in the early days should not be so much eager to share profits, because sharing profits may also hamper their growth. So in ideal situation, this should be reinvested, and investors also need to understand why the reinvestment is happening. And I see this will be over the period as it matures. Let's say a company that only shares $10 as a profit. Do you really want to take the $10 profit after investing, let's say 500 euro or something?
Right.
Now, in this case, those money can go back. And I think that's the transparency part and the communication part. We will give access to the ventures that they can communicate on regular basis with the investors, like what the consensus is wanting. What are the majority of the investors are wanting? Are they wanting some kind of dividend profit sharing payout? or they want to reinvest, and the ventures will also be willing to reinvest it. And I think the misalignment, the chance of misalignment will be very low, because the ventures also know that they require capital and they should not go outside. They can use the existing investors. And also on STOKR, it's very important that there can be multiple rounds of financing. Need not do what in ICO we have seen. It is usually a chance one shot. You do one token sale and then you cannot do, because once the tokens are already in public, they can be tradable. They do not require to buy another token, like another token. Unlike some crypto economic model says that you constantly liquidate the tokens in the market and sell it over the period of time. In the STO space, where we can see that there can be multiple rounds, let's say round 1, you can do 30% profit sharing, right? Round 2, after 1 year, you can do 25%, and so on and so forth. You can also go down. And if the company is doing good, you can also buy back, to be honest. If you think that you can give the investors a good amount of value, you can simply buy back also. And there also the investors can have an exit right.
Okay. That's cool. So I guess another question that I have is, do you have any interest in kind of expanding STOKR to the point where you could allow people in countries that don't have very well regulated, exchange markets, stock markets, to, for example, in certain developing countries, do you envision a future where you could lower the barrier to entry so that anybody around the world could potentially issue a security through your platform, and even if they don't necessarily have all of the requisite documentation and all of this stuff, because those types of documents are not necessarily issued or not issued reliably in their country. Do you envision the possibility of scaling STOKR to be more of an international stock market for all types of cryptocurrency style startups or small to medium sized businesses that are crypto friendly?
So what is the value proposition of STOKR in this regard? We are trying to connect small and medium enterprises, and not only just startups, with investors, both retail and qualified. And a huge amount of this kind of ventures are sitting in the countries where they have less access to high-tech ecosystem or the VC ecosystem and those kind of financial ecosystem also. Now, in the initial days, we are launching from the Europe because there is a European structure which is very easy to launch. And we can also take the passport regime in the European region. That means if one country approves and gives license, you can take this and get deemed right to operate in the other country. In certain matters, you can do it. And that's what we are trying to envision. I personally am coming from India, and I settled in Germany a few years back. And I'm really interested also to explore in other jurisdictions. But I also know that in India, the capital market at this point of time is not so much mature that we can bring this kind of structures, because in India still even the crowdfunding law is in a very gray zone, right, to think of others. Yes, now I see there is a holistic approach that needs to be also taken, because when we are going to also a foreign jurisdiction where there is no legal structure, these kind of countries will also ask, okay, what are the best practices that we are following? What kind of, because we don't have a law, but you should have a best practice. What are the best practices? Help us to create some kind of legislation which can be also beneficial for other companies to come in. And here we would like to actually also support other nations in this regard to help up to develop this kind of regulation. But we also require initial days some kind of understanding, okay, what really suits the market. The product market fit also need to understand, also need to go with the legal market fit, where it goes. Like we see there is a huge opportunity that in the African countries that you have, because there are a lot of ventures out there who has less access to capital, because sophisticated investment funds usually do not invest in a lot of startups over there. The same is in India, where the investments are now coming from foreign capitals, but the quantum of the investments from national investors are also not that much. So we have some plan, but we want to first focus on one market, see the product, because what is our main objective also at this point of time, that a lot of things are legally possible, technologically also possible. But the problem comes is to make the people understand, because crypto's user interface is really, I would say, it somewhere brings us back, because when we are trying to reach out a general mass, they need to understand how to manage the keys, how to manage the user journey, KYC, and then suddenly coming to token. And this we are trying to make the user journey as seamless as possible. And once we reach the sweet spot that, okay, we find the fit, then I think for us to scale will be much more easier.
Okay, very cool, very cool. And also, I mean, Europe is a very attractive market. You know, it's often said that, for example, you know, America is the first, the largest economy in the world, but actually, if you view the European Union as a single market, which it is, and you know, you kind of view it essentially as a country, because a European passport allows you to travel all over Europe without ever crossing any borders. So actually, I think Europe is actually the world's largest economy. I could be wrong there, but I think if you take even the 27 member states, I mean, Germany on its own is number 4. So if you take the 27 member states of the EU, it's the world's largest market. And I also know that in Europe, there are some very crypto-friendly jurisdictions like Malta and Estonia. Is Estonia a part of the EU?
It's a part of EU.
Right.
Yes.
Right. So, you
even
know,
I think Germany is quite open. Like, to be honest, like when I see when, you know, the Kraken is writing about what New York, the state is doing and other stuffs, it's the regulators should at some point of time understand or talk. And I think this with the small countries like European structures, I will not say there's small countries, but definitely the regulators to a certain extent in certain countries like in Luxembourg, which we have seen also and experienced, they are quite open. I will not say they will accept whatever you want to accept, and that should not be the good thing also, but they're quite open. They need to understand, because law, what was written at one point of time, must evolve. It should not stay at the same position. And coming from the legal academic side, this is what my aim is always, how to make the existing laws adaptable to the new technology. And we don't have to draft all the time a new law. We just need to acknowledge that these things are covered and these benefits will go. And this, I think the European Union's this structure, because, you know, there are different cultures of 27 member states, that actually help them to understand differences with each other and appreciate these differences in different ways. Yeah, because every economy in the European market has a different requirement, and you have to create an economical system that actually appreciates these two things. Like, there is all one side conservative, there is one side liberal, but you need to find a true balance. And if you see the cryptocurrencies are being used and people are talking, people, you know, they maybe at one point of time Switzerland was, and it's part of European economic area, but still it's in the EU region, and they're also quite open to crypto, right? The Crypto Valley Zug and others, they definitely at one point of time was so much into limelight, but this kind of companies always try to do something innovative. Now Malta did, Luxembourg is also quite looking into this matter. They're also trying to find a way how they can give the companies and options to actually open up and do set up business over there. Germany is quite a lot doing BaFin these days. I have seen it's very interesting and astonishing fact. Also, the regulators are talking in a meetup, which in a lot of countries we cannot expect. Like, to be honest, in India, I do not expect a regulator will come to a meetup event and talk.
Right.
But I've seen in Germany, BaFin, in a Berlin meetup, they're talking. Yes, and this kind of thing, this openness is coming, and this to a certain extent, also somewhere I see this is a good hope, because it has to be a trickle down, and somebody need to start. And if the big economies are adopting, because right now also US I see, because all the crypto innovations to a certain extent came from US at one point, right? Now the thing is that regulatory wise, they are facing some hurdles, but as people are quite matured. But on the other hand, these people can also come up and set up a company over here in the European region. And these things are happening. I see a lot of European, US companies are currently looking to the European market also to set up. Because as a market, it's a whole, you can do a lot of innovation. You can talk to regulators in various countries, and this openness should be there, because we are also not sure how technology will evolve at the ultimate stage, right? We can predict the best prediction that we can do. But on the other hand, we need to be also assured that the predictions, the risks that every businessman or entrepreneurs are taking at this point, they should not be criminalized for those risks that they're taking. And this, I think, in Europe, there is some kind of understanding that, okay, this is something that you're doing something innovative, and we are trying to promote in different ways. Now there is the European Union is trying to create some kind of association in Europe, which will be some kind of a private and public association that brings both big corporates and startups, and a discussion forum where you can talk to the EU regulators directly in Brussels. So this kind of initiatives is really encouraging, I would say, for businessmen or the entrepreneurs that are trying to create something in terms of innovative tech over here in this region.
Okay, yeah, that's very cool. Another thing that you mentioned earlier is that I guess you're doing this to mitigate some of the attack vectors, but you removed voting rights from the shares that are going to be issued over your platform. Can you go into more detail on that? Because for me, you know, I feel like if it was possible to solve voting for a corporation, for example, for a company, if you could solve the decentralized voting problem and you know, have it so that a shareholder could vote in like a corporate by-election, for example, on various topics, or you know, electing directors or whatever,
Yes.
then the same technology could be used to kind of radically disrupt you know, other types of elections, like in government democracies, right? Like so I view that simply kind of removing it completely is well, it's unfortunate. Like, what was that?
No, we are not completely removing.
Okay.
What we are removing, to be honest, is the voting right in day-to-day activities of a business.
Okay.
This is different. Yes. So let's say I am not this token holders will not be a full shareholder of the company. They just have profit sharing right. So what voting rights we have removed is day-to-day, in the day-to-day business affairs, the businessman should not feel, or the founder should not feel that 100 people are trying to guide what they will do. Yes.
Right.
And this way you cannot actually run also a business venture. So what they have the voting right is, if the venture is trying to reduce your profit sharing right from 20% to, let's say, 5%, there you have the voting right. And I see there are a lot of good options. One project, Ardo, I don't know whether you have heard about it. It's Ardo from Jilarita Group, who was also there connected to the NXT. They have done quite a lot of good work sectors. Also in the Ethereum sector, a lot of developments are happening on the voting ecosystem. There was one meeting on the BitFinex and ETHFinex. They have some kind of decentralized ETHFinex decentral. They have some kind of voting system that they wanted to do. The tokens that will be listed on the exchange need to have a voting from the traders on the exchange, and they try to do certain kind of structures. And there was the ETHFinex governance summit. This was widely discussed at that point. So there are a lot of companies that we see at this point, they're working. We don't need to reinvent the wheel, because there are a lot of things that is happening. A lot of really intelligent people are working on this problem. So we are trying to follow how this market is evolving, because when we started right now, STOKR is just one aspect of profit sharing rights. It can be expanded into a number of things, in number of ways, in number of different things. Let's say this will also at some point of time maybe a full-fledged shares issuance at one point. Not immediately, then the voting rights and other things comes into play. So we are really working and thinking of a solution. Now what we started to do is to launch, which is legally and easily structurable and easy to launch. So we are now focusing on the users to really understand how the crypto assets work. Once the maturity really goes, then you can bring them to the voting rights, and you can bring them to the governance, because we also need to know how, where you can actually affect the governance model. Because if the company cannot efficiently function because of this voting rights, and some hostile takeover kind of thing happens, this is also not, because there is a big problem of hostile takeover also, which we see that some competitive company try to buy your shares of the company in this kind of crypto markets, and then using voting powers they can do a hostile takeover. So we have to analyze a lot of different aspects while considering these voting options, and we are careful. We are doing some kind of research, but at this point of time it is not so mature that we can make it live and functional.
Right. Okay. So it's not something that you've completely ruled out. It's just, no. it's not going to be in the minimum viable product that you're going to be launching this spring, basically.
Yes.
Okay.
We would call it minimum lovable product. Yes.
Right.
What people loves in the initial phase. Yes.
Right. Understood. Okay. So, what would you say currently are the biggest threats and opportunities for this type of platform?
So I see there's a huge market potential, to be honest, and I see that a lot of good companies are working on this kind of ideas and how to bring tokenized securities in the space, because only 1% of the total European companies, which we did some research, and only 1% of the European SME sectors have access to the capital market. So 99% of the European companies, or the small and medium enterprises, does not have access to the capital market. And this tokenized ecosystem can actually provide them the access, because first, it can be much more lower cost than you normally think of traditional finance raising through traditional security issuance. The second, it can be fast and quite speedy. Let's say you do not have to rely on some kind of broker who takes 1 day and then the transaction happens and takes a transaction fee. It can be quite fast and it can be quite efficient. It can be transparent. You can actually see the new investors actually when they're coming, let's say Series C round, Series D round, they also can see how the conversation went, how this profit distribution went, what kind of profits right was there. So a lot of things will be transparent, and they can actually see the digital trail of the investor relations, how this kind of companies manage, which is very important for a next level investor. So at this point of time, I would say the market is going to be huge, where we do not see the opportunity is just not only restricted to startups or blockchain based, but any kind of companies like say mom and pop shops also, or family companies also. There are a lot of family companies I see that can use this kind of model, where the family companies does not give away their ownership right, but they still raise funding and they can still run their company. On the other hand, they also have some investors who can also be their potential customers. So this will create a new era of capital market, and that's why I'm really excited to see right now that we are really entering into a new capital market, which is not just only sitting in New York or in London, but it will be spread out in small local cities. And this is where we really see the next level of financial market is.
Okay, and what about the threats? Like, is there anything that you're kind of worried about? I mean, as an entrepreneur, you should always have some difficulty sleeping. There should always be something in the back of your mind that's worrying you. So, what are you most worried about with the launch of your platform?
So what we're looking for is a venture. Yes, and a lot of places I have seen people say, hey, STO is the next big, ICO boom, blah, blah, blah. It will people will raise money crazily. But this is not true, because in ICO, the oldest story was around the network effect. The network will grow, you will go to moon, someday something will happen, right?
Yeah.
This someday something may not be that much of a good storyline for an STO, because in STO, the value is not derived from some imaginary numbers. It is derived from your business model. And this is very crucial, because investors need to understand, okay, where the revenues are being generated, okay, where is the profit lines, where are the sales channels, is the profit sharing right viable, because the sales channel is never there and it cannot expand. So there is an underlying education requirement, to be honest, what I see. Yes, people need to understand that STOs will not be the big ICOs. It will be much more bigger, because we are targeting the existing capital market. So we need to also be mature in this regard. We need to really understand how to understand the financial reports. On STOKR, we are actually giving them tools for the investors to manage how to understand this kind of financial reports. We are giving them small tools which they can play and understand and make their own decision when they can actually expect their profit return, when they can, by reducing the profit sharing right, what their position looks like. And this, they do not have to rely on a very number intensive Excel sheet. They can rely on a very easy to understand interface. And that's what we are trying to give, is education. Because if we can make the investors really educated, they can manage their risk much more better. On the other side, from the venture point of view, what we are facing the challenge is making the investors understand this kind of new asset class. Because they are used to a paper-based asset class, not a crypto-based. And initially, to be honest, this is one thing that is beyond decentralization, but we are forced to do it because of certain other requirements also, is if an investor loses their tokens, the ventures will have a right to force transfer from their lost wallet to the new wallet. They do not have a power to issue more tokens, but they can do a forced transfer. And this need to be approved through a process that we have developed. So the investor need to apply, investor need to prove that they are eligible. Then the venture can only have the right for the multi-signature wallet, and then they can do it. And this process is there so that Allah, like say for example, a person invests 200 euro per month, yes, and that person is salaried employee of, let's say, 40,000. And if that person loses that money, that person should not take the entire financial burden. Because this, we see the industry is getting matured and understanding the cryptos over the period, not immediately. So for the immediate period, we will provide them an option to do this kind of request, like they can do a requisition that I've lost my wallet or something, and please help me to force transfer from my old wallet to the new wallet. And this we will put for a certain period of time, and after that we will discontinue it. But we want to give this option to the investors for their better risk management. And here, this is actually one of our biggest risks is and biggest challenges to make both investors and the ventures understand what are the risks and what are the opportunities.
Right.
This will take some time, and this for this we require the entire ecosystem not to spread, these high hopes of non-substance elements.
Right.
We need everybody to be say like, okay, this is spade and this is spade, not something different. You need to call a spade, and this is very much important at this point of time in the industry, that we should not wrap it up with the hope which is not deliverable at all, because this kind of investment will not be for short term; it will be for long term investments.
Right. Exactly. So, trying to educate people away from speculative style investments and more towards, like a Benjamin Graham value-based investment. Yeah.
Yes.
Okay. So like the intelligent investor, basically.
We call it educated investors. This is educated millennial-minded investors, and that's our target group is. You do not require to be millennial by age, but you need to be millennial by this understanding something that you are challenging. And on the other hand, education is very important. If you're managing any crypto assets or you're managing even token or anything, you need to be educated. You do not rely, hey, it's easy for me to save the token in the crypto exchange, a centralized exchange, and you keep it everything. It's not something that people can help in future. For the time being, people can be okay for first customer, second customer, they will do it, but over the period, they may not be giving that function. And this kind of functions may be expensive also. So investors need to understand, and that's also education for both investors and also for the ventures. Like ventures, let's say a company that is really running winery, based in Italy or something, and they want to raise money and they want to issue the profit sharing rights. They don't require to understand how to manage crypto. But they need to understand how to manage the risk and what are the rights. And this is also that is a task of STOKR actually in the space.
Okay. Well, one thing that's interesting when it comes to managing crypto is you mentioned this earlier as well, is the best practices for managing the private keys, right?
Yes.
So obviously that's really the biggest pitfall or the biggest risk with any kind of crypto is what happens if someone gets your private key? What happens if you lose your private key, right? So disaster recovery, how do you back up your keys? Cold storage. So not having all of your, I guess your tokens in this case on a hot wallet that's running on a live computer connected to the network, but rather to have it on a cold wallet, for example, which would be like a piece of paper with a private key on it.
Wallet.
A paper wallet, which is not a live computer. Paper can't be hacked, for example. So, what exactly are the protocols that you advocate to the people that will be listing on your platform, and what are the backup protocols? How do you recommend that people store the backups? Where do they store them? Do they have to pay for like a what do you call that, a security
custodianship?
A what?
Custodian.
A custodian. But I mean like a security box in a bank, for example.
Like depository kind of things, yes.
Yeah, deposit, like having some kind of secure storage facility for the backup cold storage keys.
Yeah.
What exactly are the protocols that you advocate? How does that work, and how do you streamline that? Because if you're dealing with a company that raises a lot of capital, that's quite a major risk, losing the keys. So how do you try to mitigate those risks for the companies participating in your exchange?
So on STOKR, investors can actually invest both with Euro and with Ether. And they receive the profit sharing rights of every venture. So every venture issues their own profit sharing rights through a tokenized element. Yes. And here, these tokens, they can store it any wallet which supports ERC20 tokens. We have already integrated Ledger, Trezor. We have also MetaMask at this point of time integrated, and we are also working on other wallets in this regard. We are wallet agnostics, to be honest, because we want people to choose their own wallet what they're comfortable with. And we are not a wallet service provider in this regard, right? We are just providing some kind of a platform interface where they are just connecting with each other. We don't need to hold the tokens for them. And the investors are responsible for holding and managing their own private keys. Yes. What we are definitely telling them, do not invest through exchange wallets, because then it will be very hard for you also to get the tokens, because this will be issued to the exchange wallet, these tokens. But this is part of also education. We have a comprehensive section of Investor 101, where we will actually educate this kind of wallet management and how to actually manage your own private keys also. And we are not trying to sell any kind of wallet in this regard. We are trying to advocate for the wallets that they are comfortable, but also we want to give them the education of risk management. From the venture point of view, on the other side, the ventures are holding this kind of tokens in the multi-signature wallet usually, and ventures can decide whether they want to keep it in Ether or they want to actually convert to a fiat-based currency. Because a lot of ventures does not, let's say for example a burger shop, they may not be willing to actually keep it in a cryptocurrency based element because they want to do it on day-to-day transaction.
Right.
They can also convert it into the bank account, and we also help them and connect them with enterprises that can help them to convert those ethers into fiat currencies. So there they can manage their risk like this way. But we are, to be in clear sense, we are wallet agnostics, and we are trying to provide them the education how to manage it.
Okay. So you don't have any specific guidance on using cold wallets and what software you should use to print your cold wallets and stuff like that? You don't have any?
We do not want to do it, because this is the thing, is the market is changing very rapidly. Yes. And if we want to promote something, we do not know what will be the risk management, how things goes. Yes. Right. We want the investors to be, let's say for example, some people I know they're comfortable using Trezor. Some people does not like Trezor because they do not like the device. There is no other reason, but they like Ledger. Like I personally prefer like paper wallets. To be very honest, I see the same risk in both hardware and the paper wallets. I like paper wallets, simple, cheap, and the same risk I take if I also take a hardware wallet. So this is person to person and how they're comfortable, and what kind of comfortableness and the flexibility that they have. So we don't want to restrict in this regard, to be honest.
Right. It's not so much about restricting. It's just more about offering guidance, especially if you're trying to onboard new segments of the market. So, for example, let's say that like your uncle or my mother wanted to register a company through STOKR, right? Surely there should be some kind of, like client support, giving them some kind of officially supported pathway to storing, to having, secure storage.
No, for the venture we are giving. For the venture, we will have a proper workshop with them. We will try to educate them what kind of wallets they are using, because we would also like to give them 2 or 3 wallets they can test. For venture, we are providing this on a very personal basis.
Okay.
Because they cannot do any fuck up over there, because that's very risky.
Right.
On the other side, the investors, at the number will be very higher. It's very hard for us to give one-on-one training. For venture side, definitely, because as I mentioned, also we are targeting the SME sector, who does not necessarily from a blockchain space, right? So we have to educate them. We have to also educate why a multi-signature wallet is much more beneficial for them, even for the governance point of view, than a single wallet. Yes.
Right. Obviously.
And this kind of things we are training them. Definitely, we will do that.
Okay, that's good. That's good. Yes. So I mean, what is the demand for this that you've observed so far? Like, are there people waiting for STOKR to go live?
From investor point of view or from the venture point of view?
Both. How many
Both.
people?
Okay.
How many people are currently waiting for STOKR to go live on both sides of the market?
So before we started STOKR, we were actually acting as a consultant. Yes, through our SECOS entity, we advised 3 projects to raise funding. Fourth one did a private round, not through an ICO. So we have an understanding how to manage a fundraising process, to be honest. And the project that we have advised is one from the NXT ecosystem. Jellyreader did an Ignis ICO, so we supported in that venture, in that process. We also supported projects like Odem, which is really performing at this point of time in terms of product development. There's one project also, ORS. And these companies have raised 8 million, 15 million, and some 20 million also plus. So we have an ecosystem, we have a network of investors that are also willing to see what we are doing at this point and when they can come, to be honest, and which kind of, because they see when we do our due diligence, when we take a project, we usually take quite some time. Normally as a consultant, we used to spend 8 months time with a venture, when in ICO space, you know, as an advisor to spend 8 months is weird. An advisor advises 24 projects, that's normal, right? We advised in last 1.5 years only 3 projects and 4 external things, because if I'm advising, I have to use a team strength of 6 to 7 people and I have to work with them for 6 to 7 months. It's not happens in one day. It takes quite energy and effort. And this knowledge actually we also got in STO space, because that level of understanding, that level of client support that we are also providing over here. Now there is a huge interest that we have seen from the investor point of view. I am into going to the crypto events in German region for the last 2.5 years. So a lot of people knows that we are working on this. So they are very much excited, and they asked me also, I says, I will not promise something which is not achievable. So we will only launch the platform when we are also fully confident that this is secure. Because when I'm launching this platform, it's not, you know, managing somebody's application of games. It's managing somebody's money. So we need to be very clear on security point of view also when what we are promoting. And also the smart contract that we have developed is to understand, okay, how to make things simple. A lot of projects in the STO space, they're only focusing on the US market, but securities law in the US market is quite complex. Whereas in the European market, we can actually be much more flexible, and that's what we're using. And the smart contract also reacts like this way. So from the venture point of view, we have quite a lot of interest. We are right now onboarding projects. In the initial phase, we will only support 3 to 5 projects. We are in talk, in the final stage of negotiation right now. Once you have everything closed, then we will disclose somewhere in March, 1 month before it goes live. So we have some venture interest also. We have also some interest from corporates, the corporate ventures who would like to actually partner with us. And they'll sometimes, you know, these corporates also have their own entrepreneurs. Yes, not entrepreneurs, but entrepreneurs. And they usually get small amount of fund from the company, but company also wants to get additional funding from outside. And they're also exploring option with us, whether this is possible. We are also on the platform, let's say, I am not so much of an expert in genetics, right? I'm not coming from genetics background, but we may have projects on the genetics background. We will have projects from the PropTech background. So we are also trying to take external experts who are into that industry for more than 10, 15 years and working from big companies and startups. And they will come on STOKR also as an advisor and help us to do the due diligence of those projects. Because we are taking due diligence very seriously, because the projects that comes in the initial days, we need to be very much aware of who these guys are, what kind of business model they have. And this, we are not trying to rely only internal due diligence, but we're also trying to take external understanding and the knowledge. And these people will also be an expert on the platform. Over the period, as I mentioned, the communication will also be there. Let's say you are the person who also invests, but also not only invest, but you ask very relevant questions on the platform, you will get special badges on the platform. So when you post a question, a venture sees that there is a value in answering this question and they cannot dodge your questions. This kind of things we will create on the platform over the period. Yes.
Okay. So you mentioned earlier that some of the feature set, some of the functionality of this platform will be centralized, and that you will kind of leverage the decentralized benefits of the Ethereum network. So what will be centralized, and why do those things have to be centralized? And is it in the roadmap to go fully decentralized at some point in the future?
Yes. So right now, the primary thing which is centralized is the KYC process, right?
Okay.
We are managing the KYC process for the venture, so ventures does not have to do it on their own. But once you as an investor as KYC, your public address will be whitelisted, and this whitelisted public address can actually transfer the tokens. Why it is relevant to give you a background is the tokens that is issued in security space must be identifiable who are the holders. Yes. So the tokens cannot be freely transferable. I cannot transfer it to any person who has been sanctioned or under any kind of regime which we are not allowed to transact with financially. That's a risk for us as a company also. So the tokens can only be transferred if the transferee is KYC also. And once the transferee is KYC, the public ether address is KYC and whitelisted, these tokens can transfer. This element right now is centralized because we as a company are right now doing the KYC process with our partners, and then we are authorizing those public addresses to put in the whitelist. But once they are on the whitelist, the tokens are issued, we have no control. Yes, we do not hold the tokens. Tokens are being held by the individuals, so that's a decentralized element. And also, we do not control who cannot and who can. What we do is, as per regulatory requirement, who this persons must be and what kind of qualifications they have. So this element, because of regulatory reason, also we have to be centralized, because the ventures at any point of time must be able to say to the regulators also who are their token holders, who are their financial interest holders, and with whom they're distributing the profits. And for that reason, we need to put it. The second part of centralization is at this point definitely is how will we know that the company is making profit or revenue, right? This cannot be visible on chain. So you have to centralize with some auditing firm. But over the period, as we can see that some kind of auditing softwares and other things that are coming that can be automatize their process of auditings, then auditing report can automatically come from those kind of softwares. And then if you have kind of API system that connects with those auditing books, it can work, right? So this we see in the long term, there is a possibility. The third one is definitely the voting rights. The voting rights is a huge opportunity to decentralize that aspect, but we need to find how to manage the governance. So this should not be used against the venture.
Right.
And it should not go, because we can see a lot of positive aspect, but we should not also agree and accept that there is no negative aspect, right? There is also a fallout. So we need to find the risk and reward, and then we need to launch very carefully. So these things are all in pipeline. And over the period, also another crucial aspect, the fourth point I would like to mention is venture onboarding. How the ventures can use token. At this point of time, we as a company are restricting which ventures can come. But over the period, as the market will mature and the investors network will be matured on the platform, we will give them the opportunity that the investors by themselves can also choose which kind of ventures can actually come in, and they can vote on their own. And this will be a process that we will think definitely after 10, 15, 20 projects are there and we have a process, then it will be easier to structure, but these are all in pipeline. So initially we are in a hybrid structure, some part in centralized, some part in decentralized. To a certain extent, we will be much more flexible over the period, but I cannot see immediately because of the current regulatory structure of capital markets that we can be completely decentralized. Because I do not want to give any kind of false hopes, because there are some kind of regulatory requirements which we cannot avoid until the law changes completely.
Right. Yeah. Obviously, you just given the nature of KYC regulations and how KYC actually works. I mean, KYC means know your customer. So that, typically you need to have a photocopy of some kind of government issued ID, like a passport or a birth certificate or something like that. And so you have to have some kind of centralized authority that can validate that those IDs are genuine. And you have to, that for now, KYC cannot really fully be decentralized. But is there anything on the horizon that you think could limit or even completely restrict the need for KYC implementations?
Can you please explain this part, because I don't understand the requirement or limitation.
Well, I mean, so from a security perspective, I'm not sure that it's really necessary to have, a database of grainy copies of people's passports, right? And I'm not sure that this database could ever consist of a mathematical proof or an irreversible proof of anything, right? It's not provably true that these documents are genuine, and you're always relying on a central authority that could be fudged. There's a point of failure there that is centralized, and I feel like in the long run, a mathematically provable approach that just relies on cryptography or the PKI infrastructure is the way to go. Like, if you can figure out a way to mitigate the risks of being fully decentralized and mitigate the risks of not implementing any kind of KYC system, you then have a system that can scale again around the world, right? That doesn't limit you to just Europe. And if you can solve that problem eventually, just by being on the network, on the internet, you can access markets like India. You can access markets like all kinds of developing countries like China and Russia and Africa and South America. And you can also give people alternatives in countries like Venezuela, right, that are just completely failing right now. And you can offer a credible exit strategy for people in those economies that would definitely want to get whatever valuable assets they have out of the Venezuelan central banking system and into something that is a secure, reliable alternative. But I personally don't see how you do that by relying on KYC in one specific jurisdiction. Right, so that's the choke point that I see for scaling.
Yes, and I also see, like, there is I would call it as a KYC silos. For every product, how many times you do KYC for different. Like, let's say you want to have a bank account, you have 3 bank accounts, and you create bank accounts for the KYC for the bank accounts for 3 times, right? And it's not that you have to update also in certain banks constantly, and this is not scalable. And this, I think, certain level, the international organizations are feeling that they have created a redundancy, and this is a loss in economy, right? You're constantly doing the same kind of things, which is not required. It's an efficiency loss, I would say. Yes.
Yeah.
And to be honest, this is not something that we are not thinking, but at this point of time, we definitely see that there is a lot of initiatives that are being taken on, and we have seen, like, let's say some kind of like U-Port also tried to do this, solving the situation, right? Civic also tried at one point, but there are also identity service providers that are really working. That this says you do not require to give the document to somebody, but just acknowledge that you have it, and based on that, some kind of agreement can come into conclusion. And I see these things are coming. You need to be regulatory-wise a bit more flexible, and there's some kind of things I would expect in next 2 or 3 years down the line is coming, because as you said, like, let's say 20 crowd investment platforms are there, 20 banks are there, or 200 financial institutions are there, and your data is with everybody because you did KYC with everybody. So why not we actually bring those information back to your mobile, and you just give them access using cryptography, definitely, and they just have an entrance point when you want this service, and you throw them out if you do not want the service. And this thing is coming. This thing, I see, this is not very long that we have to wait for. This can be achievable in next 2 or 3 years, but at this point of time, we do not see this is the top point. We want to create some new wheel, because there are a lot of companies that are really working and are quite advanced in this kind of product, I would say.
Yeah.
But I totally agree. But I totally agree that this is a redundant aspect, and we are also bound by regulatory requirements. But to be honest, we are also now talking to the regulators and trying to follow, because let's say a bank wants to connect with us, and we just share the KYC database. You don't have to give us the KYC information. We share the KYC information with them. Let's say we have a partnership with an exchange. We just share our whitelisting function, then you don't have to do another round of KYC. You just give your consent.
Right. And the other interesting aspect when you mention that whitelisting function is what would prevent someone from transferring their tokens from a whitelisted address to a non-whitelisted address?
The tokens will bounce back. The tokens will not be transferred.
They won't?
It's controlled through the smart contract. Yes, it's in our smart contract that we have developed. The tokens will not be transferred. It will be it will bounce back.
Okay, so in your smart contract, you will integrate a whitelist of...
Yes, it's already integrated. Yes.
Okay. Wow. And then wouldn't that mean that you'd have to update the smart contracts every time you add a new whitelisted address?
No, you don't. We don't need to update the smart contract. The smart contract will be the same. What we have to update is the whitelist function, the whitelist database. It just interacts with the whitelist database. That's it.
Oh, that's interesting. Wow. Okay, that's cool.
So that's the idea is, let's say 20 projects are there, and these 20 projects will have different investors, and these investors can also, let's say you invest in project A. If you want to invest in project C, you don't have to do a second round of KYC on our platform because you have already done the KYC. And you can also think of a peer-to-peer transfer also because of this kind of whitelisting function. And there you can actually also transfer between two individuals on a peer-to-peer basis, because those whitelist these addresses are whitelisted already. Okay,
that's cool. That's interesting. That's interesting. Another thing that I find kind of a compelling idea, which is a non-KYC variant of your platform, would be for microloans, for example, right?
Yes.
So let's say that you want to enable people to lend money through a cryptocurrency to other people in a developing market, and you want to just lend out very, very small amounts of money, like the amount of money that you need to buy a bag of rice so that you can go sell smaller amounts of rice individually to people, on the street or something, right? So that you could actually stake these micro ventures. And doing this without any KYC whatsoever, you still kind of mitigate a lot of your risks, because historically in other kind of microloan enterprises, they found that even though they don't have any restrictions, like people can simply default on these microloans. But then if they don't default, they build up a reputation with that microloan organization. And over time, they're able to borrow larger and larger amounts of money. So I wonder if you're interested in that space at all, of having fully decentralized kind of just using reputation scores of just pseudo anonymous entities, because that's ultimately that's what crypto and blockchain technologies are optimized for, right? Like these technologies were never invented to do real world identity on a blockchain. What they were invented for was doing pseudo anonymous identities on a distributed blockchain, on a distributed ledger. So I'm wondering if you're at all interested in doing kind of a fully decentralized implementation where you could allow Europeans to stake micro ventures in developing markets using just pseudo anonymous identities that would slowly over time build up reputations, so that they could stake larger and larger ventures. Is that something
actually there's one very interesting startup in Berlin, I'm just forgetting the name. It's something with BitLend, if I'm not wrong. This is actually trying to give loans in the Bitcoins, and you can actually create your credit scores based on that, and they became quite popular, and they are also doing quite a good market. Like they're really doing what they're supposed to do. They're really giving the people who are in need, like people who want for taxis and the cabs, and they want to start their small ventures, micro ventures, as you mentioned, right? But this is a debt instrument. Yes, there's a debt that there is an obligation that they pay back. What STOKR currently targeted is actually an equity instrument, right? It's a profit sharing right. Now we also need to know, at this point of time, we as a company also, we are a startup, we need to find, okay, what is our product market fit and where we really fit and to scale. So here we immediately do not see that we are going to that area of microfinances and micro lending, because that market itself huge, to be honest.
Right.
It's a market that we are, if you are focusing that, you need to focus very in depth, because microfinance, you need to be very much in a ground level. You need to know those people in a very close contact. There are some companies also, they did some kind of ICOs that were trying to do with Southeast Asian market. You need to have a ground level over there. And to be honest, at this point of time, we cannot, as a startup, we have also limited strength and limited time capacity, and also limited financial resources. So I do not see that we can immediately expand to that area. But what we can do is, in the equity market, what kind of instruments are there, we will try to take one by one over the period as we get the skill. As you also mentioned, like, what are the traction that we are getting? Education, because education will be a crucial aspect. We cannot launch 20 features and 20 products and nobody is using it.
Right.
That will be also very hard, because first of all, it's very hard to get investment also at this market. You see the crypto market, and we decided very clearly that we will not do an ICO, because we do not want a platform token on our own in the ecosystem. It does not make any sense. It's just a redundancy aspect, and we want to get rid of that. So we did a normal traditional financing. We raised a capital, and now we are using the capital to launch the product, and our ultimate aim is to scale using that capital and generate revenue. In this regard, we have to be restrictive also on our perimeter, where we can actually explore and do experimentation. But I do not see immediately we can expand in the micro loan segment, but definitely in the long-term future, we may try to find a way out.
Okay. And I guess another question that I have is, since you're launching something again, and you've done your best to mitigate the potential risks of using the decentralized infrastructure, and you're launching with a limited feature set, and you're making sure that those features that you do launch with are as secure as possible. But do you have any counterparty kind of de-risking or insurance plan in place in case there is an unknown or like a 0-day attack that would bring down your platform? Is that something that has been looked at? Are those risks mitigated with incumbent or insurance providers?
We are trying to, first of all, the first risk mitigation is trying to audit. We are taking external security agencies definitely to audit both our server architecture and everything. And also we have a internal team. We have a team of around 15 people currently based in Luxembourg, Berlin, and in Hamburg. Our tech team is around 10 people who are our in-house developers, like in-house core backend. And we have outsourced certain part, but most of the internal server stuffs, which is all in-house. We never outsource that one. This is very core to our reach. The second thing is the risk mitigation aspect, the legal risk mitigation. Myself, I'm a lawyer. One of my partner, Tobias Seidel, he is based in Luxembourg. He's having 10+ years of experience in capital market, advised big funds in having $1 billion assets. So he knows the capital market very well, and the European capital market. We have Professor of Economics from Hamburg University, who is into the crypto and gambling research from early 2012. And he's in the crypto academic research for quite some time. We have also another partner who is an economist, who has analyzed almost every ICO that you can say in the space, because that was a part of his research program that he did. And we have people from the both academic and practical part. We have also founders that are connected with the semiconductors industry, doing working on a day-to-day basis. A person who is also a core community member of NXT. And the technology person, the CTO, who is also founder, is one of the very, I would say, he's quite knowledgeable about Ethereum structure. He's also an auditor. He has also recently wrote an article that the Binance coin has also a bug, and which was shared with the coin monks and others. So we are not only just a product people, but we also an academic people. And this is our strength. We are not only just talking and marketing, but we really know what we are talking, and we are coming from the academics. So we really try to maintain our base as solid as possible. So the second thing, the risk mitigation is the tokens. Let's say at some point after 10 years or 5 years, STOKR gets closed. Yes, let's say we cannot function. What will happen to these tokens? To be honest, you do not require us. Even if we are getting close, the tokens are still there. The whitelist function can be managed by the companies on their own self. So we will distribute the whitelist. So it's not an issue. So even they do not have to rely on us once the STO is over. So we are not something like an intermediary where they have to constantly connect with us and work with us. So this is one aspect. So that's how we mitigated a lot of risk, that we are not becoming the single point of attack vector, to be like single point of attack in this regard.
Right.
There are a lot of other risks that definitely you can say the whitelist is a single database, and it can be, we are trying to make it as much as secure as possible, as by following the best practices and also the industry standards. And also we are working with big companies in the semiconductor industries that they have also checked our server architecture and others. So we are trying to work with the best players that we have in the ecosystem. Insurance wise, we have some insurance definitely, and in this regard it will be covered to a certain extent. But to be honest, with the crypto, there is no clear way where the risk will come. We can expect, but this is also trial and error. The best possible what we can answer is we will try to mitigate risk as fast as possible. So before you see, things will be sorted out. And if it's not, we have to find a way out, because we are here to stay in the market. And in this regard, we need to be also very much clear that there need to be a constant communication, because this is a growing ecosystem. If something goes wrong, immediately we need to understand the situation. We have to do some kind of damage control, and we have to work around the solution. So we are quite open, and that's why we are increasing the team. I would say we are increasing the team in where we really require the strength and the product. And that's why we are not targeting a lot of features at the same time, but we are targeting limited features, but must be much more stable and concrete when we are launching it.
Right. I agree. I fully agree with that approach. Now, the other thing, I guess, since we know that historically there has been some stock market type platforms built on top of Ethereum, like the DAO, and we know that the core Ethereum team was able to reverse some malicious transactions, and this unfortunately caused the forking of Ethereum and Ethereum Classic. But still, if there was some kind of 0-day attack that you didn't anticipate, I'm assuming that you would also be in a position to reverse those transactions once you updated your platform?
Look, the thing is that we are using the permissionless structure, right? So we cannot reverse, to be honest.
Okay.
Yes, because then the Ethereum structure need to do a fork, because we are not doing anything off-chain. So we have to be very careful on this regard, what kind of attacks, where it's happening, and this brings the question whether reversibility will come into play or not. Because to be honest, we need to be also understandable that reversing a transaction, it's not a good sign.
Right. Absolutely.
This goes to the soul of crypto.
Right.
What Ethereum Classic did was, like, the same thing was discussed when the parity hack happened, right? And they didn't do it. And I really appreciate the fact that they didn't do it, because it should not be treated like a de facto rule that if some fuck ups happen, you do a reverse and you do a fork. Yes.
Right.
You need to come to the principle, okay, at some point of time, we need to own our mistakes.
Yeah.
Mistakes happen, own it, go ahead.
Right.
People need to see, because the DAO thing happened, it was one, community-wise, I don't want to bring my personal opinion at this point of time, but the community was also not so much clear whether that was a right or that was a wrong. It maybe at that point of time was an impulsive decision, or maybe there was no other way. But to be honest, as we mature up, we cannot do it time to time, because if you do it time to time, you lose the sincerity of the ecosystem.
Right, you lose credibility. I agree, yeah.
And user credibility, yes. Because if I see that if somebody connected to the Ethereum ecosystem can anytime do a reverse transaction and can actually fork, then where is decentralization, to be honest?
Yep, that's true. That's the whole point.
So here as a company, we require to understand what are the risks we need to mitigate, and not rely on some kind of mom dads coming and helping and doing a fork for us. So yes, to be honest, we do not expect that also.
Okay. Well, that's a good answer. I actually like that answer. Yeah, that's certainly one approach. I mean, it definitely was a pretty major point of contention, and Ethereum Classic forked only for that reason, right? That's the only reason that Ethereum Classic even exists, is because of the DAO attack. And I guess, you know, from another perspective, you know, you should limit your position in any investment, especially if it's a brand new platform like STOKR. I mean, obviously, you don't want to have a 100% STOKR portfolio, you know, in year one, right? So, you want to mitigate. You want to again educate people on how to mitigate. Exactly, exactly. Risk and expectations.
Here is our task.
Yeah.
And I think this is somewhere, you know, for the crypto, this is the best time, I would say. You know, 2018, this crash in 2019, low movement. This is the time you can really educate, and you're not in a rush. There was the gold rush era, which is gone. Yes, you can really think, build something, and then you can iterate constantly, because you get now feedback from the real people who are into the ecosystem. That's what we really want, is to really get the real feedbacks. You know, we do not expect that from the first day the minimum lovable product will be perfect. Yes. We would like to do as much as possible, but we also require feedbacks on the consumers, on the customers, and the investors, and the ventures. And this is a prolonged process.
Right.
And we want to go into the process. We do not want to do it, you know, on the day one we were doing an ICO and we are just doing this product, and look, we have got a Wall Street Journal is covering us, NASDAQ is covering us, Forbes is covering us. We don't want. We are, if you see also our marketing efforts, we are maintaining very low profile. Though we have a team, we have a product, and we have an investment.
Right. You want to scale more organically.
We want to scale organically, but the thing is that we want to also create the element of trust amongst the users. Because in this market right now, the most important is an element of trust. You need to trust in the venture. Because we are dealing with finance, and we are not the money sharks. We are people like normal, average people. Yes, we are not coming from, you know, financial world, like a huge mammoth background working with Fortune 500 companies. We have worked with big companies, but we have also our own portfolio and our own understanding. And the best part is we are coming from the academic side also, and professional. So we are trying to merge this thing. We are trying to merge the expectations. Like there are certain things, you know, I like the thing is that you may say, okay, Arnab, you just mentioned that you are force transferring from a lost wallet to the new wallet. It's not decentralized. It's a completely centralized ecosystem. I agree. I do not deny the fact. But on the other hand, we need to also appreciate if a student, let's say, is investing a savings of $200, does that person must lose that money if that person did some mistake on one night and lost the private key? Or does that person should have time to redemption, understand, and then have a second chance?
Right.
So we need to also educate and be much more accommodative at this point. And slowly we need to put decentralization, because decentralization should not be evil, you know, which is nobody understands, only few coders understand and few geeks understand, and others are losing. This should not be like this. It should be meant for all.
Right. You want to democratize
because for my mom,
technology.
Yes, because for my mom, if she also books an Uber, she first thing asks, can I pay through cash to the Uber driver? She definitely cannot, and for certain reasons, certain places, and she has to use the app in certain conditions. But in certain cases, she can also pay through the cash. So the users want to pay as frictionless as possible, and we have to provide this opportunity.
Right.
So this is what actually we are working on, to make this as frictionless as possible.
I get you. So I guess my next question is about scaling. So we know that, for example, on the Ethereum network, you can only have approximately 15 transactions per second. So I understand that for you as a new platform, this limitation is not going to be a bottleneck for quite some time. But what if, and this would be a very nice problem to have, but what would happen if you started hitting the ceiling on those transactions per second, and you started causing some network transactions, some network congestion? What is your roadmap for scaling?
So here in this regard, I would say it's lower than 15 transactions per second at this point. So 15 is also the best case scenario Ethereum can give us.
Right.
And yeah, in this regard, it's actually a lead problem, I would say, if we have that, and we would be happy to have that. But at this point of time, we do not have. But I also see in the roadmap of Casper and other Plasma also, if it comes, the proposals there they are providing is quite, I would say, not lucrative, but I would say it's encouraging that they are trying to think, because scalability is a problem. But also, to be honest, scalability and decentralization cannot go side by side, right? If there is scalability aspect, there is a centralization aspect heavily supporting that scalable infrastructure. On the other hand, when we're talking about decentralization, you need to also see decentralization will make things non-scalable. So we have to find a thin line in this. It's like, you have to sacrifice certain things to get certain things. And here I'm really not so much worried on the scalability problem, to be honest, because this will come over the period. But in the initial days, it will not be that much problem. But I think in next 2 years down the line, there will be some kind of solutions, because to be honest, Ethereum has a huge developers network, which we cannot deny. And they have been able to create this ecosystem. Another platform which I'm also really interested personally also, and also from the company side, we are interested is the Ardo. The Ardo ecosystem looks very Ardo.
Okay.
Ardo. Yeah, it's coming from the NXT community, the NXT Ardo community, and that's one platform we are really interested in. So that also have somewhere in the pipeline. We will try to find out how to integrate those. But we are trying to be also platform agnostics. We'll try to see as much as possible. But Ethereum at this point of time, we see the smart contracts library is quite matured, and that we can use as compared to other platforms. And risk mitigation wise, also, as you say, DAO and other things, we have seen what can go wrong. That gives a lot of education, which in other platforms we don't have that much.
Right.
And decentralization, to a certain extent, the number of nodes working on Ethereum structure is quite high, right? The nodes are much more distributed as compared to other ecosystem. Yes.
So it's the most mature network so far.
I would say they have the most developers' attention right now. Yes, and on the other hand, they have the good amount of library that are developers required to create something on top of it. And also there are a lot of fuck ups, so there's a lot of education aspects also.
Right. They've found a lot of edge cases. Yeah.
Yes, there are a lot of kind of edge cases, and this we can rely. And we are trying to give the option of investor to invest with Ether, because Ether is also very easily, you can easily buy it in any countries. Bitcoin and Ether, these two cryptocurrencies you can easily buy. And that's the reason we do not want to also create our own token, because why you require to create an own token when you are not raising any investment, right? So here in this regard, we thought, okay, investors can directly invest with Ether. And Ether has also, every exchange in the world, they will have at least Ether. There are some exchanges which for regulatory reason only have Bitcoin, but yes, that's the reason we also are really inclined towards having Ether at this point of time as an investment option. And scalability, I think this problem will not be a big problem once we start scaling.
Yeah, I mean, from kind of my understanding and speaking to a few people in the community, side chains are pretty much what a lot of people are focused on when it comes to answering the scalability questions, right? So things like the Lightning Network and stuff like that. But I'm not 100% sure how Lightning Network would be relevant in the smart contract space. Maybe it could be. I don't know. I mean, I'm not an expert, but I'm not 100% sure how you solve the smart contract network infrastructure with side chains or off-chain transactions.
Me neither, to be honest. And I think the Lightning Network will really help the Bitcoin ecosystem. And I see also Rootstock is providing some kind of opportunity that can bring the smart contract concept in the Bitcoin ecosystem. So there is an opportunity I see. But at this point of time, the scalability will be really relevant for the payment processing companies, where you require a huge amount of transaction, about 50,000 transactions above per second. And there you have the questions. But to be honest, at this point of time, the scalability problem is not a major concern for also most of the companies that is trying to create a product, because the users by themselves are not that much. The users adoption are very low, if we see. Very few dApps are actually have a real users, active users, right? So the first thing which I see the foremost at this point of time requirement is a good user interface. So user starts getting onboarded.
Mm-hmm. Right. Yeah, absolutely. It's all about, you know, growth and then solving the scalability issues when you actually encounter them. Yeah. Yeah.
Yes.
But it's also
here
important, I think, to have a roadmap because 15
no,
transactions.
we have to be honest. Like, look, the thing is that right now, once we launch the platform, to be on at this point of time, we will have around 3 to 4, yes, and not immediately 4 projects will go live at the same time.
Right.
So let's say only 2 projects goes live at the same time, and also in the ICO space where we have seen even 6 transactions per second for 2 projects is a good amount. Mm-hmm. It's not, I'm not talking about a Genosis era, right, or pre-Genosis era where, you know, within a matter of 2 minutes you have raised 4 million or 2 million.
Right.
I'm not talking about that era because that era I do not see is coming. So when it is coming also, you know, the people, by managing their gas payments and other kind of things, they will not lose out. Yes. Yeah. They will not lose out. So the problem which may come is in the secondary market, secondary trading once it gets activated, and securities secondary trading I do not see immediately is getting activated. It will take some time until 2020. T0 is planning to launch in few days, but I do not see in the European market how fast they can come. There is a requirement, and also I do not know how much secondary market will be active for the retail investors immediately. Mm-hmm. There may be an option for decentralized securities market, but that's not at this point of time it's so much relevant in discussion. Mm-hmm. But it will come, and there we see the transaction speed will be relevant. So I see by the end of this year we will also be much more careful about where we get this scalability aspect, but mm-hmm. immediately it's not a part. And I see with the Ethereum's current roadmap also, we are quite comfortable, because if they can achieve also, it will be quite a fascinating job, because we will require that when we have around, let's say, 10 projects doing the fundraising at the same time. And there we can see, okay, even we require at least of 6 transactions per second. And more than that is getting, it's harder because other transactions are also happening. But the problem will come if there's more people are oversubscribing, and there this rat race will start. Right. And this we do not see immediately. The question is.
Very cool. Very cool. Well, I mean, you've answered all of my questions. I mean, and you know, thank you for that. I really appreciate you making the time. Was there anything else that you wanted to cover?
Thank you very much, actually, for having me. Also, the 2 very important things is through your channel. If you have a venture and you want to know about STOs and would like to explore how we can work together, please feel free to reach us. The other important thing is, as an investors, we are also trying to get people, and we will also open for the beta launch somewhere in March or April 1st. So please feel free to join the Telegram channel also. You can have a first look on that. And yes, we would like to have your comments and your opinions and feedback as much as possible. So feel free to comment and give the suggestions. And also, if you have some kind of other ideas that you also discuss with George, like you gave me some suggestions also how we can think of other expansion. This is very important also. Mm-hmm. We need to think. There are certain countries which we really are looking forward outside Europe at this point, mm-hmm. which we want to get. Once we launch the platform, we want to be very clear, okay, how much our finance supports to expand. And we would also like to see what are the options, but we are open for partnerships. So if somebody wants to partner with us, please feel free to reach out to us. We're open for that.
Great. And how would they reach out to you? What is your, would you like them to reach out through your
I can give you the link, and you can put it on this comment on the description below.
Sure.
So they can access the description. Also, you can drop an email at hello@STOKR.io mm-hmm. and join us Telegram. Both the links will be there in the description.
Wonderful. Okay. Well, thanks again for your time. I really appreciate it. I thought this was a very informative discussion.
Thank you very much.
Yeah, thank you
for having me also. Have a great evening and take care.
Yeah, you too. Bye-bye.
Ciao.
Ciao.